Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing world of business filings for you. Today we're diving into a proxy statement from Tecnoglass Inc. Get ready because this document is like a shareholder's roadmap, telling us what is happening behind the scenes and what decisions are being made. If you like getting clear insights from these official reports, make sure you are subscribed and consider joining our Discord community linked in the description below. We're looking at a document that is all about their upcoming annual general meeting. Think of it as the company's yearly checkup report to its owners, the shareholders. It covers who is running the show, how people are getting paid, and what big decisions are up for a vote. It's basically a heads up on everything shareholders need to know before they cast their votes. This whole filing is essentially a heads up for shareholders about their annual general meeting. It tells everyone what to expect, what they'll be voting on, and gives them all the important background information. So, what are the big topics on the agenda for this meeting? Well, first up, they're looking to elect new directors. Specifically, they want to bring in 2 Class C directors. These individuals will be responsible for guiding the company for the next 3 years. It's like choosing the captains of the ship. Next, shareholders get a say in a way that doesn't legally tie the company's hands on how their top executives are paid. This is often called a say on pay vote. It's a way for shareholders to voice their opinion on whether the compensation packages for the folks running the company are fair and reasonable. And speaking of say on pay, there is another vote. Shareholders will decide how often they want to have this advisory vote on executive compensation. Should it be every year, every 2 years, or maybe every 3 years? This helps the company understand shareholder preferences on how often they want to weigh in on executive pay. Now, let's get into the details of who is involved and what is happening. Tecnoglass Inc. is the company we are focusing on today, and they are clearly laying out the path forward for shareholder engagement. When we talk about who owns the company, it is important to look at the big players and the people in charge. This section breaks down who holds how much of the company's stock. One of the major shareholders is Energy Holding Corporation, and they hold a significant chunk, about 43.0%. That is a substantial stake and means they have a big influence on company decisions. Then there is FMR LLC holding about 14.6%. This is another significant investor, and their holdings also suggest a notable level of influence. When we look at the directors and executives altogether, they own a smaller percentage, which is often the case. In this filing, the group of 8 directors and executive officers collectively hold a very small portion of the shares. This highlights that the company's ownership is largely spread among external investors. Let's head over to the actual proposals. The first one is about electing those Class C directors we talked about. The board is nominating Jose M. Diaz and John Paul J.P. Prez to continue their service. This resolution is essentially saying that these 2 individuals, Jose M. Diaz and John Paul J.P. Prez, are being recommended for re-election. It also touches on a point about indemnification, which basically means the company agrees to protect them from certain liabilities as part of their role. It's a standard practice to have these protections in place. The board is strongly recommending a for vote on these nominees. They believe these individuals are the right people to lead the company. Now, a bit about the people themselves. We get a rundown of the directors and key executives to understand their backgrounds and what they bring to the table. Jos M. Diaz, the Chief Executive Officer, has a very long history with the company, over 40 years of experience in starting and running businesses, has been a key figure leading the Tecnoglass Group since 1983. His deep operational experience with their subsidiaries, ES Windows and Tecnoglass A, makes him a valuable candidate, according to the board. Christian T. Days, the Chief Operating Officer, is also a long-time leader, heading up Tecnoglass A since its inception. He is focused on improving efficiency and safety. He is also Jose M. Diaz's brother, which is pretty common in family-founded businesses. His operational expertise is also seen as very important for the board. John Paul J.P. Prez, a director, brings a different kind of experience. He's been the president of Related Group, a major real estate developer in Florida. His background in real estate development, financial modeling, and construction management is seen as a strong asset. He also has experience on other boards and is involved in various community organizations. Luis Fernando Castro Vergara, another director, has experience as a fund manager in private equity and has held leadership roles in Colombian development banking and food companies. His experience is noted for his business relationships and independent board service. Anne Louise Caracate, a director, has a strong background in marketing, sales, and management. With over 35 years of experience, she is a business entrepreneur and consultant and has advised companies in agricultural asset management and food distribution. She also has experience in health insurance in Latin America. Julio A. Torres, a director, has an extensive financial background. He has served as managing director of Nexus Capital Partners, a private equity firm, and has also worked in public credit and treasury for the Colombian Ministry of Finance. His experience in investment banking and his work with JP Morgan Chase are highlighted. Carlos Alfredo Cure, a director, has held high-level positions, including external advisor to a major Colombian conglomerate and former chairman of the board of Ecopetrol SA, a leading oil and gas company. He has also served as Colombian ambassador to Venezuela and held various executive roles in the cement and port industries. It is always good to see how the company ensures its board is independent and free from undue influence. Tecnoglass states they adhere to the New York Stock Exchange listing standards for director independence. They've identified several directors as independent, meaning they don't have significant ties that could compromise their judgment. The board itself had a busy year, holding 7 meetings in 2024. It's a good sign that directors are actively involved and attending the meetings. The audit committee is pretty crucial. It is made up of Carlos Cure, Luis Fernando Castro, and Julio Torres, with Mr. Cure as the chair. This committee is all about making sure the company's financial information is accurate and that its accounting practices are sound. They meet regularly with the independent auditors. They had 5 meetings and also acted by written consent a couple of times in 2024. Their responsibilities are detailed, covering everything from reviewing financial statements and auditor qualifications to discussing risk exposures and internal controls. And importantly, Julio Torres is identified as an audit committee financial expert. This means he has the necessary accounting or financial management expertise to really dig into the company's finances. The report from the audit committee itself confirms they've reviewed the financial statements for the year ended the 31st of December 2024 with management and their independent auditors PricewaterhouseCoopers. They're making sure everything is up to snuff before it gets presented to shareholders. Then there is the nominating committee made up of John Paul Prez and Anne-Louise Caricart. Their job is to find and recommend qualified candidates for the board of directors. They met once in 2024. Their guidelines are about finding people with achievements, intelligence, experience, and strong ethical standards. They look for a diverse range of skills and perspectives to make sure the board is well-rounded. The Compensation Committee, with Julio Torres as chairperson and Luis Fernando Castro as a member, is responsible for setting executive and director pay. They met twice in 2024. Their duties are pretty extensive. They set the overall compensation philosophy, determine CEO and other executive officer compensation, and oversee incentive and equity-based plans. This is where they really shape how executives are rewarded. This section is where we get into the nitty-gritty of what the top folks are actually making. Their compensation philosophy aims to attract and keep talented executives and directors. It's about rewarding performance, aligning executive interests with shareholder value, and being competitive in the market. A key part of this is also considering risk and reward. This is where the numbers really hit home. Let's look at some key figures for the named executive officers for the years 2024, 2023, and 2022. For Jose M. Diaz, the Chief Executive Officer, his total compensation in 2024 was $4,445,280. This is up from $3,969,000 in 2023 and $2,835,000 in 2022. It shows a clear upward trend in his compensation as the company performs. Christian T. Days, the Chief Operating Officer, has a very similar compensation structure, also reaching $4,445,280 in 2024. This mirrors his brother's compensation with increases from 2023 and 2022 as well. Santiago Giraldo, the Chief Financial Officer, saw his compensation rise to $898,128 in 2024, up from $801,900 in 2023 and $594,000 in 2022. This steady increase reflects his role and responsibilities. Carlos Amin, a Vice President of Sales, had a total compensation of $1,651,545 in 2024. This is notably higher than his previous years. It seems there might be a significant bonus or other compensation component driving this jump. Samir Amin, Vice President of Operations and Logistics, also has a total compensation of $1,651,545 in 2024, mirroring Carlos Amin's increase. This suggests a common compensation structure for these VP roles, perhaps tied to specific performance metrics or new compensation plans that kicked in. Looking ahead to 2025, the Compensation Committee has recommended and the board approved some adjustments. For the Days brothers, a base salary of $3,822,080 plus a bonus of up to $1,248,832 is planned. For Mr. Giraldo, It is a base salary of $731,808 with a performance bonus of up to $292,723. These bonuses are tied to 2025 financial performance and targets. This is always an interesting one. The ratio between the CEO's pay and the median employee's pay. For 2024, the CEO, Jose M. Diaz, earned $4,445,280. The median employee's annual compensation was significantly lower at $5,242. This results in a pay ratio of 848 to 1. That means for every dollar the CEO earned, the median employee earned about 1/8 of a cent. This is a very large gap, which is not uncommon in large public companies, but always catches the eye. It's also noted that as of the 31st of December 2024, the company had about 9,837 employees. This gives us a sense of the scale of the operation. Non-employee directors receive a base cash compensation of $84,585 annually. There are additional fees for serving on specific committees, like the Audit Committee and Compensation Committee, which can add a significant amount on top of the base pay. Employee directors, however, do not receive additional cash compensation for their board service. For example, Carlos Cure's total compensation as a director in 2024 was $143,562, which includes his base pay and committee fees. Luis Fernando Castro Vergara and Anne Louise Caracat each received $127,164, while Julio A. Torres received $112,939. Looking at equity compensation, it seems Tecnoglass has a plan, the 2013 Long-Term Equity Incentive Plan, with 1,593,917 ordinary shares reserved for issuance. However, as of the 31st of December 2024, no awards had actually been made under this plan. This suggests that while the mechanism is in place, stock-based compensation for employees hasn't been a primary focus yet. This section is where we see transactions involving people who are close to the company. It is important for transparency and to ensure fairness. Tecnoglass sells products to Elutrific LED SaaS. What is interesting here is that affiliates of Jose Diaz and Christian Diaz have an ownership stake in Elutrific. In 2024, sales to Elutrific were $1.1 million. This is a related party transaction, and it is disclosed. Similarly, they sell products to Prisma, Glass LLC, a distributor in Florida. This company is owned by family members of Christian Diaz. Sales to Prisma, Glass in 2024 were $1.2 million. Again, it's about full disclosure. They also sell products to Studio Avanti SaaS, a distributor in Colombia. Alberto Valilla, who is a director of Energy Holding Corporation, the controlling shareholder of Tecnoglass, owns and controls Avanti. Sales to Avanti in 2024 were $0.8 million. These are all transactions that need to be on the shareholders' radar. Tecnoglass is also involved in a joint venture named Vidrio Andino with Saint Gobain. Tecnoglass holds a 25.8% stake. They recorded equity method income of $5.4 million in 2024 from this venture. They also purchased $31.3 million worth of products from Vidrio Andino in the same year. This part is about the external auditors. The audit committee has selected PricewaterhouseCoopers LLC or PwC as their independent registered public accounting firm for 2024. The fees paid to PwC were $910,942 for audit services in 2024, up from $854,512 in 2023. There were also some smaller fees for audit-related and other services. It is good to see that the fees are detailed and that the auditors are indeed independent as required. This is the advisory vote on executive compensation that we mentioned earlier. Shareholders will vote on whether they approve the compensation of the named executive officers as disclosed in the proxy statement. It is crucial to remember this vote is advisory. It is non-binding, meaning the company isn't legally required to change anything based on the outcome, but it definitely carries weight in terms of shareholder sentiment. The board is recommending a for vote here, and the last big voting item is about deciding how often these say on pay votes should happen. Shareholders are asked to choose between every year, every 2 years, or every 3 years, or to abstain. The company's stance is that a 3-year cycle is best. The board is very clearly recommending that shareholders vote for holding the advisory vote on executive compensation every 3 years. They believe this provides enough time for meaningful feedback and adjustments. Now, let's zoom out and look at the bigger picture for Tecnoglass. Looking at the financials, we can see a clear upward trend in compensation for the top executives over the past few years, rising from 2022 to 2024. This suggests the company is potentially rewarding strong performance from its leadership, though the widening gap between executive pay and the median employee pay, as highlighted by the 848, to -1 ratio is something to note. The related party transactions are disclosed, which is good practice for transparency, but it is always worth keeping an eye on these to ensure they are fair and don't create conflicts of interest. The board structure seems sound, with independent directors and active committees overseeing key areas like audit and compensation. The fact that they are proposing re-election of existing directors suggests a level of confidence in their current leadership. The compensation committee appears diligent in its oversight, and the company's compensation philosophy emphasizes market competitiveness and shareholder alignment. So, what is the overall story here? Tecnoglass is holding its annual meeting to get shareholder input on leadership executive pay and how often that pay should be reviewed. They're highlighting the experience and qualifications of their directors and executives, and details on compensation are laid out transparently. The company seems to be rewarding its top talent, and its internal governance structures appear to be in place to ensure oversight. In conclusion, Tecnoglass presents a picture of a company with established leadership and a clear process for shareholder engagement. The executive compensation, while substantial, is presented with detailed justifications and aligns with their stated philosophy. The related party transactions are disclosed, offering transparency. The company's direction seems focused on maintaining stability with experienced leadership while providing avenues for shareholder feedback. Alright, that is our breakdown of Tecnoglass's latest proxy statement. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.